Hello and welcome. Today in this video we're going to talk about Russia, the Russian economy, and especially the sanctions that have been imposed on this country and their effects today. For that we have my friend Cyprien here. Hello?
Hello, hi, Xavier Titleman. How are you?
Cyprien, what do you do when it comes to the Russian economy?
I'm an economist focusing on the Russian economy and an associate researcher at the National Gendarmerie Research Center.
Excellent. So, first when we started there were, about 20 packages of sanctions?
Yes, that's right. The 20th package of European sanctions.
What was our objective? What were we trying to do? It was to make Russia collapse economically, to harm its ability to wage its war.
Actually, it's true that some politicians initially said that the sanctions would cause the Russian economy to collapse. In my opinion, that was wrong and not the main goal of the sanctions. Also, we have to admit the Russian economy hasn't collapsed. But if it hasn't collapsed, it's because its production is driven by the defense industrial base. That's something we can clearly see with exactly the DIB. We can clearly see it in the sectoral figures. Month after month, it's the sectors associated with the defense industrial base that are driving the economy upward. But despite everything, we still have to point out that the Russian economy is starting to catch a bit of a cold. In 2025, growth is only just above 1%. That's a drop compared to 2023 and 2024 when it was over 4.1%. That's the effect of the war and the sanctions.
Let's remember, Russia isn't directly comparable to us since it's a developing country. It's catch-up growth, so it should be averaging around 4%, like Kazakhstan.
Greece and all the others. That's a very interesting point because there are a lot of people from compros on social media who say, look at Russia, it's much less in debt than we are. What right do we have to criticize Russian growth when we ourselves are struggling to reach 1%? But yes, the average for developing countries, for emerging countries, is a little over 4%. And regarding Russian debt, if Russia had even half of France's debt, that's it. They would collapse because investors have little confidence in Russia's ability to repay its debt. Whereas we, France, are at more than, I think, 115 or 120%. But it's not very serious because behind that, we have an industrial base, a strong economy, and high-quality export products that give investors confidence.
And by the way, we borrow at just a few percent, while Russia is around 17 to 20.
That's exactly right. And by the way, the interest rate, the key rate of the Bank of Russia, is at 14.5%, while inflation is only at 6%. Well, 6% is a lot, but the key rate is really very high. Why? Because Russia is an emerging economy, and so to anchor the confidence of the markets, consumers, households, and to avoid hyperinflation, it is forced to have very high rates.
So that means the fundamentals of the Russian economy are not great. But then, once again, is it because they're investing everything in the war, or is it because our sanctions are having an effect?
So clearly there is an effect. Putin is choosing to sacrifice the civilian economy to devote as many resources as possible to his war. Russia's military spending went from 3 to 3.5% of GDP in 2021 to 7 to 7.5% in 2025. So it's a massive increase, and obviously it harms the civilian economy. It lowers productivity, competitiveness, and it pushes the civilian economy out of international competition in the medium and long term. So it's a choice of Vladimir Putin, but it's also an effect of the sanctions that limit Russia's oil revenues and block direct access to Western technologies. And actually, I wanted to get to the three main objectives of the sanctions. The number one objective of the sanctions is to increase the cost of the war for Putin. Basically, what does that mean? It means that Putin knows that as long as he continues the war, he'll have less oil revenue, and he won't have access to high-quality Western technologies. He'll also be disconnected from the international financial system.
But then, typically with these three examples you gave, we know that Russia is bypassing the sanctions. We know the missiles being fired at Ukraine today were made less than 6 months ago, so it's all very recent. And yet we still find more than 200 Western components in every KS-1 missile that is fired at Ukraine. So they still manage to get around them?
Exactly, they get around them, but that doesn't mean the sanctions aren't working. That's also the second goal of the sanctions. It's that, in fact, it considerably increases the cost of the components that Russia imports. Basically, either it will still manage to import Western components through indirect routes, but it will cost more because you still have to pay for a logistics route that is longer and harder to access. You have to find intermediaries who are willing to take on the risk, so they expose themselves to American secondary sanctions. So it's much more expensive for Russia. And when it can't access these Western components, it will import Chinese components of much lower quality. For example, just as an example, Huawei tried, well, actually, Russia asked Huawei to replace the advanced semiconductors from the American company Nvidia. And there's a Korean newspaper that tells us the failure rate was 80%. So there you go. Exactly. And you recently did a show with Marianne where you explained that Russian drones had a much lower success rate than Ukrainian drones. So the success rate you mentioned was 40 for the Ukrainians and only 10 for the Russians. Well, that's actually explained by the fact that Ukrainian air defenses are effective, but also because Russian air defenses are less effective than the Ukrainian ones. And also that whether it's the semiconductors used to make Russian drones or the electrical connectors, they're either already used because Russia can't get new ones, or they're Chinese components of lower quality.
So that means first, the systems they're able to get, they pay more for them.
That's it, there you go.
Second, they don't have the volume they want.
Exactly.
So, if Russians got all the components they wanted from abroad, they could fire 2 to 4 times more missiles.
That's already a small win, that's right.
And you're saying that the Chinese are trying to compensate or take over a market because they've basically gained a monopoly over Russia?
Pretty much.
Okay, that's not the quality that was expected. But at least regarding the famous BRICS partnership, etc., are the Chinese trying to trap the Russians because they have a monopoly, or is it still a real partnership? Well, no.
For me, it's not a real partnership. It's an unbalanced partnership. And that brings me to the third objective of the sanctions. It's to isolate Russia. It's to force it to turn to a limited number of partners, so it loses negotiating power. And if Russia is isolated, that means it's weaker. And so the fact that it's weaker is interesting for the West and for Ukraine. As we said, it will pay a premium on the products it imports. There's an interesting study from the Bank of Finland from November 2025, which explains that China sells sanctioned products to Russia at a markup of more than 90%. So,
the same product costs 90% more in Russia than in France.
That's exactly it. Actually, we can also talk about financing. Some people explain to us that even if Russia doesn't have the foreign currency to pay China, it's not a problem because China is ready to.
That's not enough stuff.
Lend, yeah, that's it. Chinese banks don't want to lend to Russia because they're afraid of Western secondary sanctions, so there's also a problem with access to Chinese financing. China is reluctant to lend to Russia.
And then incidentally with the war in Iran, we saw that the Emirates, Qatar, Turkey, all those countries that were helping Russia circumvent sanctions, they found out that they were getting components that they themselves had helped Russia to circumvent. I think these countries will also cut supply, putting Russia in even more trouble with procurement. There's a very important element that we haven't really talked about yet, and that's oil and gas. The sanctions we've applied fall into different categories. First, we stop buying it ourselves, but we also require other countries to pay less for Russian oil. How does that work then?
That's right, as you mentioned. First, there was a European embargo that meant we stopped importing 90% of Russian oil. So there is an exception for Hungary and Romania, which are isolated, but overall Europe has stopped importing Russian oil. And so that means that in order to sell its oil, Russia turned to India, Turkey, and China. As a result, it lost negotiating power. And that's what I was saying about the third objective of the sanctions, which is to weaken Russia diplomatically. In fact, it is forced to sell its oil at a discount that has reached as much as $30 below Brent crude, the North Sea benchmark, and the international benchmark. So that's the embargo. Then there's the price cap, which works, and which worked especially at the beginning. The price cap, which was initially set at $60, then went even lower. In fact, that's if Russia used Western services, for example, maritime freight, maritime insurance, fleet managers, and so on, to export its oil. It was allowed to use Western services, but only if the oil was sold for less than $60 initially. Then, I think it went down to $47 or $47.5. In any case, it was decreasing. After that, it built up a shadow fleet, a phantom fleet. So again, people say yes. As a result, it managed to get around it, but it was extremely costly for Russia to build a phantom fleet to acquire tankers.
Tens of billions of dollars in purchases of Russian oil. Yeah, and then you have to operate them and you have to protect them.
And then we shouldn't forget that when Russia uses its shadow fleet, meaning it also uses insurers that aren't Western, But these insurers are afraid of sanctions, of American sanctions. And so they impose a risk premium on Russia. And what's really interesting is that since the end of 2023, the United States has started to impose secondary sanctions. They have sanctioned ships, fleet managers, and so on. And so all these parallel non-Western players who are supporting Russian oil exports, actually they are taking on a bigger risk because it's very serious to be put on the SDN list, the American sanctions list, since they are cut off from the American market. They can't use the dollar. They can't open or have a bank account in the United States, so it's really very serious for them, and so
they impose prices. It should be pointed out that as soon as there is an international contract, it is settled in dollars. So if they can't use the dollar anymore, it doesn't work. And then the companies that produce oil, if they can't buy equipment anymore, if they can't buy systems to drill, to bore, if they can't buy ships anymore, it's a mess.
That's it, exactly. It's the weapon, secondary sanctions, it's the nuclear option to actually deter these operators from serving Russia and its oil exports. And so Russia still manages to sell its oil in volume, but with risk premiums that are high. And it's the same with what we saw yesterday with the interception of the ship. When the European states, the European navies, the French Navy, so this has happened 4 times, they intercept a ship from the Shadow Fleet, and then they bring it back to a port to inspect it. They impose fines on it, and most importantly, they reveal who the operators associated with this ship are, who can themselves be sanctioned. So this already increases delivery delays. Russia may have to pay penalties, so we increase the costs.
$100 per day of delay.
Exactly. So there are those penalties, there are the imposed fines. And then there are also all those operators linked to the Shadow Fleet who incur an additional risk. So they increase the risk premium they impose on Russia. And the higher the risk premium is, the more Russia has to discount its oil to compensate for the final price delivered to the buyer, which is set by the market.
But here, do we have any idea of the loss of earnings that these oil and gas sanctions have represented since the beginning? Are we talking about tens of billions, hundreds of billions of dollars?
It's tens of billions. Actually, it's hard to estimate because it depends on the volumes, it depends on the prices. Actually, even in terms of discount, there are different sources. The discount isn't the same to the east of Russia as it is in India. We even have to admit that during the war in Iran, Russia actually benefited from a premium in India. There was such a shortage of oil and such a fear of running out that, in fact, the Indians were willing to pay a premium to Russia. So it was very short-lived, but it's very difficult to estimate. But the scale is in the tens of billions.
But the war, because, well, at the beginning of the year, Russia was actually supposed to give up an increase in its military budget. And then, when Trump had the bright idea to invade Iran, Russia thought, well, in the end, I'm not canceling my budget increase. So it still gave Russia, which was economically drained, a little bit of breathing room, and it gave them a few months of reprieve, I would say, economically.
So actually, we're coming back a bit to the Russian situation. Russia's growth in the first quarter of 2026 is negative. It's at minus 0.2, and that's despite the boost in March, which actually helped to restart growth. But in January and February, it was minus 1.8. So that's year on year. It's compared to the same period last year. But even with Iran in the first quarter, growth is negative. And the Russian Ministry of Economy in May significantly revised its growth forecasts downward. It is forecasting growth of only 0.4% in 2026, even with Iran. So yes, Iran is a reprieve. We can say it's a reprieve. It's not going to boost growth to 3%. Since 2023, growth has been declining 4%, 4.1%, 1%. And now we would expect 0.4% in 2026. That's the effect of the war. That's the effect of the sanctions. And the war in Iran will eventually come to an end.
Of course, of course. It's actually possible because it will hurt the Russians and it will benefit us.
That's exactly it.
You discussed many aspects of the war. There are quite a few economists making projections. I was told that by the second half of 2025, Russia, at the pace it had before, would be done for. But actually, they sold their gold reserves. They are being economically drained. Now they're short on men and can't produce enough anymore. Are there still scenarios where we say, that's it, it's not possible to continue, the population will wake up? That's the limit.
The limit, in my opinion, is that Russian growth, in fact, is likely to stagnate around 0. Because if the military-industrial complex has reached its growth potential, It can only grow through modest productivity gains. Because, as we said, since Russia no longer has access to Western technologies, productivity gains are weaker. So when the growth potential has been reached by the military-industrial complex and the civilian economy has very little labor, because the workforce will have been absorbed by the defense industry or directly by the war, or because they have fled to
abroad, as about 1 million men have.
Exactly. Well, I don't have a crystal ball, but we're still heading towards sluggish, if not negative, growth. By the way, Deputy Soliman Solimanouf, clearly said that he expected the economy wouldn't survive if the war continued, and,
That's a Russian deputy.
That's it, that's exactly right. So despite the regime, voices are starting to speak out. And similarly, a famous mathematician in Russia at the Moscow Economic Forum didn't hesitate to say that he expected a double-digit recession. So what awaits Russia in the short term is clearly sluggish growth. And even the IMF is forecasting growth of only 1.1 in 2026. And that's probably going to be revised downward with the negative growth in the first quarter. But what's especially interesting, is the fact that Russia is actually sacrificing its long-term economy. Even before the war, one of the main issues was diversification, because Russia depends too much on oil, too much on gas. And in this era of ecological transition, it could be dramatic if it fails to diversify. And with the war, obviously, there are only two main sectors. It's the defense industry and the oil and gas sector. And here, Putin is sacrificing. He missed the big opportunity for diversification. And for 4 years now, the war has been going on, 4 years that he has been deprived, at least in part, of direct access to Western technologies. And he is sacrificing his economy, his civilian economy. And that's innovation. There are more. When there were rates at 21 at the start of the war, the central bank's key rate, and now it's at 14.5. How do you expect to invest when you're a company with such high rates?
Let's be clear. Does that mean a bank will lend to a company at 14?
Approximately.
In an economy growing at 1, so actually, investments will never pay off through growth.
That's exactly it. There are also a lot of bankruptcies, which is interesting. I found the number for sole proprietors. The number of bankruptcies in 2025 was 3 times higher than in 2023. It's an explosion. And conversely, the number of new business formations dropped by 20 in 2025 compared to 2024, reaching the lowest point in 14 years. So as we can see, the civilian economy is wasting away. It's a catastrophe for Russia's civilian economy.
And well, to top it all off, Ukrainian sanctions, what impact do they have in all this? In the end, isn't it effectively an extension of our sanctions? Because with our sanctions, it feels like we've hit a ceiling. Ultimately, what hurts even more is Ukraine destroying the productive base and the means of financing the war.
Yeah, that's a very effective lever. There were debates a while ago at the beginning of the war. People were afraid it would cause panic in the markets, an explosion in the price of crude oil. But actually, the quantities compared to the global markets are still negligible. But on the other hand, for Russia, it's a hard blow. For example, last April, the price of Russian oil went up by 20%. But thanks to Ukrainian sanctions, so Ukrainian strikes, the exported volumes have dropped by 24%. And so if you combine the two, it results in a 9% drop in revenue.
Since they're only producing crude now, they can't export refined products anymore.
Which is worth more. Yeah.
They have shortages, even internally. There are shortages in Russia.
Exactly, and just yesterday they put an embargo on kerosene exports until November. And there's also an ongoing embargo on gasoline until July. So what's interesting is that refined products actually bring in much more than crude oil because they're higher quality. So when the Ukrainians target the refineries, it's very interesting because it erases part of the added value that Russia can add to its oil.
Okay, we're in a situation that's not great. Could we accelerate the economic collapse of Russia? The goal is still to make sure it doesn't have the means to keep attacking Ukraine. What more can we do anyway?
To significantly increase the cost of weapons production, slow down production times, limit production volumes, and above all, improve the quality of the weapons that are being used in Ukraine. How do we do that? How do we go about it? So far, we've banned pretty much everything we could ban. What we could implement, for example with oil, is not just a price cap, but a complete service ban. We prohibit Western services, maritime insurance, and so on from servicing Russian oil. That way, Russia will be even more forced to turn to non-Western operators and intermediaries who have greater bargaining power and can impose additional costs on Russia. All right. And of course, what's absolutely crucial is to continue methodically and systematically with the policy of secondary sanctions. Because, as I was saying, secondary sanctions panic the intermediaries who help Russia. They raise Russia's risk premiums and costs directly tied to secondary sanctions. That's where I believe we have room to maneuver. It's the maritime pressure on Russian ghost ships, namely the ships exporting oil, but also, why not, the ships transporting weapons? Well, not weapons, but technological components to Russia.
But I have an idea. Yeah. Couldn't we help the Ukrainian strike? That's also an indirect sanction, right? It's not us. It's a special logistical operation. We provide the Ukrainians with equipment.
No, well, why not? And also set up this Sky Shield. That's essential because not only would it save Ukrainian lives, but it would help Ukraine win the war of attrition, and so it would increase the costs for Russia. So that's, I don't know, it's essential. I don't know why it hasn't been done yet.
It's a political issue.
It wouldn't cause an escalation, in my opinion, because we would just be destroying Russian drones, Russian missiles. I don't see, it's a shield, not a sword.
We agree, and we'll send you a link to this initiative where you can also sign petitions. Last point, the prospects for Russia. The war ends next week, they haven't collapsed, things go back to normal. What happens to Russia? Because people say a lot that the Russian economy is overheating, everyone's employed, blah, blah, blah. Does it collapse when the war ends? So?
It's hard to say, but what is certain is that there will be imbalances. First, there will be thousands of soldiers returning to civilian life with problems like alcoholism, delinquency, and difficulties accessing the healthcare system. We know how Russia treats its veterans. It's not very honorable. These are also people who are unstable.
We can already see it today. Former prisoners already face major challenges reintegrating into civilian life, and the statistics are alarming.
There you go. That brings both social and economic costs. And then, as I was saying, there was an increase in bankruptcies, so there will be fewer civilian businesses. So then, how is Russia going to absorb this workforce and retrain them for civilian jobs? That already assumes there are companies and jobs available. But there are a lot fewer since there are bankruptcies, since there are fewer new businesses being created, since the civilian economy is in a slump. But also, these soldiers will need to be retrained. This is a career change. It's like when they join the army, they get training. I don't know how long it lasts in Russia. It probably isn't very high quality. But in any case, when you return to civilian life, you also need to learn a trade. So there will be a significant imbalance between the labor supply and the number of available jobs.
Plus, there are millions of employees from arms companies who no longer have anything to produce, who will be left with nothing to do. There you go.
That's it.
So it's already really tough at the end of the war.
And so not only is there a risk of unemployment, but on top of that, all these people who received large bonuses will start spending them, so there will be a risk of a surge, an explosion in demand, while supply doesn't keep up. So a very sharp rise in inflation. And so the central bank will have to respond with an increase in interest rates, which will make investment more expensive, or at least make investment more complicated. So it could take 1, 2, 3, 4 years for Russia just to get going again. And even if it manages to get going again, as we said, how much time will it have lost? Years, not just 4 or 5 years of war, maybe 10 years, 15 years, because all those competitors in international trade, well, the other emerging economies will have taken a big lead over Russia in terms of competitiveness and productivity.
And then, incidentally, they've also pre-sold part of their oil to China for decades, which means they'll actually have less oil revenue than they would have had if there hadn't been a war. It's not looking good for them, honestly, yeah.
They're in a bad spot and, well, they're just exposed. Well, they're dependent on two sectors, the military sector and the oil and gas sector. Since they miss the big opportunity for diversification, they won't be able to produce medium or high value-added goods like computers or semiconductors. And that's a shame for the Russian economy, at least for the civilian population who are paying the price for Putin's whims. That's it.
We're not going to feel sorry for them, in the meantime. It's very clear, I think the outlook isn't very, very promising, neither in the short term nor in the long term. No. The sooner they stop, the better, because waiting longer means more infrastructure will be destroyed and less invested in their own road, rail, and gas systems. 40% of rural residents don't have toilets. Meanwhile, hypersonic missiles are being used to destroy power plants. In short, still, when we look back on this period, I think it's going to be pretty hard to justify to the Russian population.
That's it, exactly.
Cyprien, thank you very much.
Thank you, Xavier. It was a pleasure.
Hope you enjoyed it. See you soon.